Hey everyone, welcome to another episode of the Adventures of a Real Estate Investor. I'm Susie.
And I'm Michael, and we're excited you joined us for this adventure.
So today's very special guest is Eric Nelson. Thank you so much for joining us today.
Oh, my pleasure, guys. Thanks for having me. Even the pre-show is amazing. Like, just chatting. It was hard to push record just because we were into it. So thanks for having me.
Yeah, we are super, super excited as well. And fun fact, Eric and Michael and I are going to take over Tulsa because that's where we both invest. That's how we were connected because we invest in the same places, we network in the same places, and we really do have a lot of the same core values and mindset. And so it is very, very exciting to have Eric here with us today.
Yeah, this is amazing. And we were actually fumbling with how we met, but it definitely came around to we invest in the same place and we love our manager there, of course. And then, like you said, we have a lot of the same ideals. So I'm just excited to dive in here.
Absolutely. And so Eric kind of mentioned just a minute ago that we had a pretty awesome pre-show. So stay tuned to the end because we're going to get into the details about what we talked about. This cool little trip that Eric took. So stay tuned. But before we get into that, let's get into knowing a little bit more about Eric. So Eric, would you mind sharing with our listeners, our adventurous family, a little bit more about you and why you started investing in real estate?
Yeah. So I think I had sort of what I'll call a standard middle-class upbringing. My parents were amazing, not super wealthy to speak of per se, but definitely privileged. And I don't ever deny that, but it was the classic, go to college, get a job, grind it out, retire, hopefully. That just unfortunately is how a lot of Americans are raised. And so I went to college, studied engineering, got an engineering job, and just a complete and utter beatdown, just punch the clock and pretty much hate it. And luckily, since then I moved on to other jobs I enjoy, but somewhere along there, my wife and I just kept saying, how do we, first of all, it was how do we prepare for retirement? Because we just weren't saving really any. And then second of all, we started to realize oh, you could actually gain some income from this too. You don't have to necessarily just set stuff aside. So it kind of started this whole trickle thing where we bought a couple single families. A friend of mine turned me on to Bigger Pockets. Lots of people have that similar story. And it just began to kind of grow a little bit. And the more Marie and I, my wife Marie, bought, the more we wanted to learn and treat it like a business, and just kind of grew. And I'm going fast because most people's trajectory, that takes a long time. It took us a long time too. But eventually we got to this place where we wanted to scale. And a mentor of mine was you need to look into partnering. And I was kind of resistant to it, honestly. But that was really kind of what led me to where we are now. And I do have some really cool stories about those early ones with creative financing and that type of stuff if we want to talk about it. But ultimately, it just led to partnering with friends and people I know, partnering with family. And we started buying some real estate with basically what I'll say is other people's money. And we were kind of running the show. And then eventually there was okay, I think we're ready to kind of do the syndication model. So now we buy, as you guys know, we buy multifamily properties, and a similar concept is offer this passive investment for people we know. So it's pretty exciting.
That's awesome. And so you said it took you a long time. I think you started investing 10 years ago, right? So you start off with just one single family rental and then just two, pick them up from there. Is that
Yeah, pretty much. So I guess to be totally fair, my brother and I bought our first house in 2007. So I guess that's 15 years ago. But we were in college, and basically we were just house hacking before we knew what that was. I was working as an intern for someone. This is again in 2007. So I made decent money for 2 months. And back then that's all the bank needed to see. The lending obviously was not good in 2007. We had no business getting that loan, honestly. But we bought this house and just rented to our buddies. And that's a really cool technique for really anyone, that has the ability to rent out to friends or whatever. So we kind of house hacked. So that was way back. So we ended up selling that one a few years later. And we did make some money, even though that was after the crash. But we learned a ton about renters, about fixing up a house, about all that stuff. And then later, Marie and I really started investing truly. And that's why I say 10 years was 2012 area. And to answer your question, yeah, we bought one single family. And really kind of what started our trajectory was we lived in our first house and then we moved a couple years later and we were able to sell that first one tax-free. Because if you live in a house 2 of the last 5 years, it's a tax-free investment. So that's where we got kind of what I'll call a nest egg, our first chance of oh, we can actually buy something. So this is actually a cool story. My son was just born. I used to walk the neighborhood with him basically every day. And we would just walk around and I would look at all the for rent signs and all the for sale signs. And I would call every for rent sign. And I'd say, hey, I'm not looking to rent, but I'm looking to buy. Your house looks great. Of course, 200 no's, or at least. But I was learning the market. I was learning like what rental rates were. And then I came across this Six-Plex that I don't know if I'd really ever noticed before. This gentleman was out there basically putting a for rent sign in the yard. And I kind of said the same spiel. I was like, hey, this looks like a nice property. Can I ask what you're renting it for? And then I was like, I'm not looking to rent really, but I'd look to buy if you're interested to sell it. And he was just like shocked a little bit. Like, well, I guess I could do that. Maybe. But you could tell he's kind of tired. He's just like tired of renting or being a landlord. And so anyway, he kind of sat on it for a couple of days. I called him a few days later and I said, hey, have you thought about selling? And in the meantime, I looked up the property and I found out from the assessor that he had owned it for years and he had inherited it. It was paid off. It was kind of all the like check marks you want for an owner finance situation. So he's like, yeah, I talked to my wife. He's like, we would sell it, but we'd have to have a crazy number for it. I was like, okay, well, what are you thinking? And he's like, well, we need $1 million. And in our market, I live in Colorado, $1 million for 6 units is pretty good. So that was first like, oh, well, that doesn't scare me right away, even though it did scare me. But I was like, well, would you consider financing this? Because I know that you don't own anything on it. And he's like, well, what does that mean? Is this interesting, like kind of, I don't know, like relationship building times where I was like, here's what that looks like and here's what that means. Similar thing. I was like, okay, we'll talk to your wife and sit on it for a few days. A couple of days later, I call him back and I was like, look, we'd pay $1 million. Have you thought about this? He's like, yeah, I think we would like to finance it. There's lots of tax benefits for us too. He'd talked to a CPA. I was like, great. I was like, but here's the thing. We don't have a huge down payment. Could we do 3% down and a 40-year amortization? And he was like, I don't know what those words mean, but I trust you. It's like 30,000. He's like, we don't need a bunch of money, so let's do it. And so I was like, all of a sudden had a verbal contract for $1 million property. And we were just like, I was losing sleep. Like, what am I doing? I'm crazy. $1 million in debt, blah, blah, blah. But started calling people I know and trust. And they were like, no, sounds like a good deal. Have you done the math? All that stuff. And Maria was amazing. She was like, do you trust the math? Do you trust yourself? Can you handle more work? And all this stuff was like, yeah. So we kind of went for it. And that was really our big leap into real estate. It was like, now we have this semi-multifamily property. We were managing it, learning a bunch. And then that really springboarded us into kind of the next level because we then learned just so much about it. It was really cool that they were willing to finance it at such a low down payment. So that was kind of a cool step into the world.
Yeah, it's awesome.
Did it. And I love that he's like, I trust you. We've only met on the sidewalk twice, but I trust you.
I think it was because I wasn't like salesy per se or pushy. I was just like, yeah. And I also was complimentary of his house. I was like, you guys have done a good job. He had some sentimental value. I mean, there's more to that story. There was like a mountain of his mom's stuff in one of the units that he wasn't renting. So part of the story was like, there was an empty unit. And in doing the math, I was like, look, what I'm going to pay you in a monthly mortgage payment is actually more than what you're getting in rents right now. It's a win-win-win. And I knew all the rents were low. I knew there was an empty unit, all that stuff. But I wasn't like pressury or anything. And I'm not trying to like toot my own horn, but this is a lesson for listeners. It's like, sometimes the sales technique works. Sometimes just being nice works. It's like, just be kind. And that's a huge benefit as well. So that was really kind of our entrance. So to answer your question, Michael, we ended up with 11 local units. So we had a triplex after that and one more single family. And then eventually we sold all those off because I prefer the model that we work in now. And so that's where we place our own cash in our own deals because I really believe in it too. And I think it goes a long way for investors to say that too.
Yeah, absolutely.
Did you do owner financing for any of the other ones?
I did. Yeah. In fact, the house we live in now. So it was this almost the exact same story because after I got success with that, I was like, oh, I'm going to ask everyone if they'll do this. So actually a very similar story. Same thing. I saw her on like in front of the house. I saw the for rent sign. I just started talking with her and it ended up being almost identical, like a low down payment. She wanted that kind of tax benefit of not having to sell it all at once. And so we live in a triplex now. Like our front house is where we live. And then behind it, it's a duplex. And so when I got to talking to her about it, I was like kind of looking around the corner, like, what are those? Like, what's back there? And she's like, oh yeah, I have 2 rentals. And I was immediately like, we got to get this house. Where we want to live, and this is how we can afford it. I'd love to like have this conversation. And she was amazing. So very similar. So we've done those 2 owner finance deals, and since then sold the Six-Plex and refinanced the triplex. And that was kind of interesting too, because when I called her to say we're going to refinance, she was actually kind of frustrated with me, to be totally honest. And I was like, look, we won't refinance. I mean, you did a favor for us. I don't have to, but you're about to get a check for $500,000. I don't know what you're upset at me for. And so when I said that, she's like, oh, okay. Yeah, that makes sense. And so we kind of came to agreement that it's fine to refinance. But yeah, I learned a lot through that process too.
For that one, like initially, like when you explain owner financing to someone, like how do you explain it to 2 people who did not know at all?
Yeah, good question. What I usually say is you're essentially acting like the bank. You're going to loan a certain amount of money, but you already have that money, right? So like you're going to loan your equity, and it depends on the person, how sophisticated they are. But typically what I'll say is, just imagine I'm going to pay you down over time, just like a loan. And a lot of times, again, like that payment could be at or above your rental rate. And the one thing that I think really helps people understand it is I always say, worst case scenario, if I default, you get this house back. And chances are I've put some money into it. So you're going to get a better product and have got all that rent along the way. So that's the situation you're putting yourself in. And I think that kind of resonates with people the most. It's like, I'm not going to run away. You know where I live now, by the way. Like, because people want to know that worst case. It's like, well, are you scamming me? It's like, well, no, I'm living here. And by the way, if I don't pay you, you get it back. So I think it depends on the person, but that's a good question. It is hard to explain what it looks like to finance for somebody.
Right. Especially because people are so used to banks. It's like, what do you mean?
Yeah. Yeah. And they're like, I don't want to be that. I'm like, well, you kind of just have to walk them through what that means. And I never really get into terms until people like wrap their head around it. Cause I think that's how you could scare people off. You start talking about amortization and rates and then maybe a balloon and all those things. It's like, those things can come later. If they're open to at least financing, then you can walk that road.
Totally. Yeah, because the confused mind says no. So that.
Yeah. Awesome. Good point.
Just going back quickly to the house hack you guys did. Was that in Fort Collins? Just curious.
It was, yeah. Yeah. It was like right in the middle of town, like south of campus, maybe 2 miles. It wasn't a perfect student location. So we actually had to like give our neighbors like food and stuff before our parties. Like we'd like, I don't know if bake cookies, but like we'd give them some kind of burrito with a note that's like, we're having a party tonight. Sorry about the noise. Text us if it gets too loud. We were like these college kids within sort of a family neighborhood, but our neighbors were awesome. And yeah, I mean, Fort Collins holds a special place in my heart for sure.
Absolutely. Yeah. I don't know. So I went to CSU as well.
Yeah, I remember. Yeah.
That's everything. Yeah, it's funny situation. Like we had neighbors too, and like I'd bring over a bottle of wine, like, hey, we're gonna have a party. She's like,
that's a better technique. The wine. Yeah, I think we stuck to like Qdoba burritos for some reason, which is not good. They're like, I have a gross cold burrito and a note. Like, I hate these guys.
Hilarious. So now I kind of want to switch gears. Now we talk about house hacking, talk about owner financing. Now you go from single family to like small multifamily, now to larger multifamily. As you kind of progress down this real estate investing road, how do you see current interest rates in the current economy now, like kind of affecting your investment strategy?
Yeah, I love that question. And I think it depends on which sort of asset class we're talking about. So this is being recorded at the end of September. So I don't know when this will come out. Basically, right now, they're way higher than they were even 10 months ago, right? So they're in the 6.5%, 7% sometimes. If we're talking about single families, let's say you're buying a single family as a long-term rental. In my opinion, the interest rate doesn't really matter. If your calculation works and you can make money with the current rate, forget what it used to be. That's not what it is, right? Focus on what it is now, and can you find a deal that works with those rates? And I think some people are on the sidelines. So you might just find a deal where you offer someone maybe slightly under asking or whatever, and you get into that property. Who knows what interest rates will do? I never predict, but let's say they come down 2 years from now. then you can just refinance. And all of a sudden you're in an even better situation. So if we're talking about that world, I would say I would just focus on the deal rather than the rate. And whatever the rate is, just plug that into your calculation. As far as like multifamily stuff, that's more tricky because there's a lot of prepayment penalties out there. And so if you're locked into a rate in the sense that you may have a big prepay to refinance, then what we've done is we've looked to assume loans, right? So like take over a loan that someone got 2-3 years ago at even 4.5, which used to sound high, pretty attractive right now. So that's kind of what we've been going after is like loan assumptions. But if we have to purchase at the current rate, I still think what I said kind of fits is like, I don't think sellers, to answer your question, I don't think sellers have caught up to the heartburn of what the market's done in the last 10 months. So I think sellers are still hoping for a higher number, but you just cannot fudge the numbers. You just can't lie about does it work or not. So it's been even more challenging to find a deal. I mean, we've been saying that for 3 years, but most recently it's been tough, I think. So it's a similar answer is if the deal works at the current rates, we're buyers, still love it. But I'm never going to lie and say, okay, what does it look like if we refinance in a year and they'll be down at 4% again? It's like, no, that's super dangerous. Right? So I would say we just focus on the math of what works now. Still same thing. Exit cap rate has to be conservative, assuming the market's going to get worse, all those things. But I think it's frustrating, but it's the reality of the market we're in.
Agreed. I was just going to say, brief. I think we're in like this weird area now where it's like interest rates have gone up, but sellers are still looking to get that 2022 or end of 2021, beginning of 22, like premium for their property. So like, I think it'll cool off a little bit more as interest rates kind of settle. But who knows what's going to happen? Right?
I hope so. I think we all hope so. I think either there's two things. Either sellers have to kind of face the facts of like, whoops, should have sold a year ago, or interest rates need to potentially come down, or cap rates will soften. I mean, there's kind of those three metrics that can move. But I think ultimately, to you guys' point, we don't know. So we just have to kind of be within the parameters we're in at the moment.
Yeah. And even just like one thing to add, or like even as buyers, right? We also might have to accept, and investors actually, that returns just might be lower because if the NOI is there for a seller, like there's no reason that they should have the price per door or the price in total go down just because the interest rates are up. So there's just so many different variables, but because so many people started investing in the last 2 years, they're like used to these really great returns when really those are just like the ones that we should say like, that was a really great like investment for you. Yeah, I'm really happy for you, but like they all will change.
Super true too. Yeah. And that's hard. I mean, that's a hard thing to stomach as a new investor. Like last year, if you were getting 8-9% cash on cash, or if you experienced an exit last year and you got crazy IRR, that's probably not going to happen anytime soon again. And to say anything above 20, for example, is like, that's just not sustainable. So that's a great point, Susie. It's probably not realistic moving forward. I mean, maybe, but not in the current situation.
Yeah, because I don't know like what article Michael and I read, but Austin in some places, Austin, Texas, had like 100% increase in rent growth. And I was like, it's not going to happen again anytime soon. Else people aren't going to rent. Like,
can you imagine? Imagine you're a renter and you're like $800 or something. And then seriously, short period later, it's $1,600. I mean, just talking practically, like that's insane growth for renters. And I think you guys and I share this like similar focus on tenants. Like we care so much about tenants. I don't know if I could stomach raising their rent 100%. Just that's really hard.
I was just saying we have a property right now that we're in this situation. It's like we're at 100% occupied, and usually at that when it's 100% occupied, you keep pushing rents. But we've pushed rents like we're $200 above our pro forma, and we don't want to like can't push it like morally, like
yeah,
because we like to keep within like order the median income of our residents, and it's like we don't want to push any higher than that. They're going to start pricing people out, and then like where are they going to live? Like then they have nowhere else to live. When we're providing workforce housing, and most of our properties are workforce housing, like those people are renting by necessity, not by choice, right? So we don't want to price them out. Take care of them.
Yeah, I mean, I love that attitude, and the reality is, I mean, we just have to be honest with our investors too. It's like we could potentially get a little more but you're hurting people in the process. And that's just never going to be our style. So yeah, I really like that attitude.
Absolutely.
Yeah. And even, sorry, now it made me think of like the scarcity and abundance mindset too, even as an investor, right? Like with an abundance mindset, like you were just talking about, Eric, like we don't want to hurt people. So if every party involved is not hurt, like, and you trust that like what the returns will be are there, then like you go much further with your investment realistically, right? But then there's also the scarcity one where people are like, oh, I'm going to wait till I find that deal. And it could be months or years. And they were nervous to invest. And so then they did it and they did it and they didn't. Like that's big too. Sorry, lots of thoughts.
Oh, that's good. I had coffee with a friend of mine this morning and he's been wanting to invest. And he's like, basically we have coffee and he's like, how do I buy rental property? I'm like, dude, you know how to buy rental property. Like we've had this conversation. You have to jump in. It's the same as buying your personal residence. When you go to the closing table, it's like, oh my gosh, this is so scary. And then 3 years later, you're like, well, I'm sure glad I did that. And not every buying of a rental property is a good situation. But if you've done the math and you know the metrics, you have all the stuff, you have a good manager, it's not as scary as it sounds. You just have to dive in. You just have to go for it. And the thing is, that's what I was telling him, is like worst case scenario. He's like, well, what if it's a bad market? I'm like, what's cool is if rents go down, or if rents rarely go down, but let's say value of the property goes down is more likely, it doesn't matter. You can just continue to rent that property and wait a little bit. I was like, as long as you have the right amount of reserves and you feel comfortable, you're not stretched thin, it's usually a few years later, usually be grateful you did. And that's a hard thing to just get over.
Totally.
Absolutely. One thing I wanted to kind of mention when we were like 2 steps ago about people selling, sellers selling, things like that. And we're in this weird limbo, right? Where it's like, we're still expecting a premium, even though interest rates have gone up. One thing that you had mentioned, you said that sellers who should have sold a year ago are now trying to sell, right? And they're trying to get that price that they thought they were going to get from a year ago. So going back to that, it's like, yeah, those people I think might even hold through this process. So those deals will come off the market now. And then it's going to be as those deals are peeling off, the deals where the people who got like short-term bridge debt with the variable interest rates with no cap on their interest rate, like those are the people that's going to be a fire sale here shortly, because a lot of these people are pegging out now on their interest rates.
Yeah, I totally agree. In fact, I was going to say that same thing. Is if I were in a seller situation, which again, like if I'm in that situation, I'm either one, I'm going to hold, or two, only sell if it still meets the metrics with today's interest rates, right? But there might be some deals to be had out there in that scenario. People like literally have to sell it. And if they are, that's probably the folks who are selling at a pretty decent price right now. So yeah, I mean, that's why we're still kind of buyers and we're still looking for those situations. And I remember being at you guys do a lot of events as well, but I remember being at an event and there was a lender there and he was like, I remember vividly, he said something to the effect of rates will never go up more than 1% in the next 2 years or something like that, because he was pitching bridge debt. And I was like, wow, I don't want to disagree because he's probably smarter than me when it comes to lending. And I'm not saying that like a gotcha or told you so, because I don't think anyone really necessarily predicted what's happening now. But it was just like a bridge debt's always felt extremely dangerous to me, especially with no cap. So yeah, there are those folks out there I think are probably in a pinch. It was just such an attractive offer. I was like, oh yeah, 3.25% for 3 years, no interest or interest only. By the way, it's variable, and when you're done, you're done. And whoopsies, like, I don't know. It always just felt a little bit tricky to me. So I think you're right. There could be some potential deals in the next year or two.
Absolutely. And so in this environment, in this questionable whatever's happening with everything going on right now, it's pretty crazy in England right now, by the way. I don't know if you noticed, like the pound to the dollar.
Yeah. I heard the bank yesterday had to buy a bunch and it was just a crazy deal. Yeah. So this is a wild economic ride. Yeah.
Bank of England had to bail out the government £65 billion yesterday.
Crazy.
So interest rates wouldn't skyrocket here and other things like that. But anyways, because I guess I don't want to get into the economics over here. But anyways, the question I wanted to ask you, Eric, was that during this time, whatever, like we see a lot of people who are just nervous to invest. People lost money in the stock market over the past several months now, as things are kind of diving and go back up and diving again, just because there's like a global recession on the brink of happening right now. Like, what are you telling your investors during this time? And like, why is multifamily such a great hedge against inflation?
Yeah. I mean, I think I hesitate to say it's really a hedge against inflation, because I think inflation probably stings a little bit across the board. But I would say it's similar to what I told my friend about like a single family investment is the stock market does what it does. And essentially you're just at the mercy of it in a sense. Like, the thing I hate about the stock market, and I don't want to just totally bash it because there's a time and a place, right? But I don't like how someone can tweet something and all of a sudden markets go crazy. Like, it's so like politically based. It's based like in celebrities and stuff like that. Whereas multifamily, from my perception, is like, it's way more steady in general, and it's way more like predictable. And no one can ever predict truly, but generally speaking, people need a place to live. Generally speaking, people will continue to need to rent a place. And then the cool thing is we have total control. We have control of when we sell the property, right? So if there is a downturn, again, chances are, you'd have to have a pretty rough situation for your rents not to cover debt service. So even in a very bad situation, you could kind of quit the CapEx stuff, focus on maintenance only, cover debt service. You can, in a very bad storm, you could ride that out for quite a while, right? And then historically speaking, real estate just goes up. It's just a reality. So if you have the ability to weather the worst possible storm, if you're an investor, your money's in there, it's cruising along. Even in those situations, if you're not getting a great return on your capital year over year, and I'm talking a pretty grim situation right now, if the operators are good and they sell at the right time, chances are you're going to make money. So it's just one of those things with so much more control, so much more metrics to prove that it is predictable than the stock market. For those reasons, I like it so much more, especially in a recession.
Yeah, thank you.
Yeah, and I'm not an economist. Like I said, I never predict. But I am I really love numbers. I really love just like plain facts. It's like if somebody tweets something, our property in Tulsa is probably not going to change value. and again, like, rents typically go up. Generally speaking, like, the markets are going to go up. I like that city. I like the metrics of it. Even in a downturn, I see it doing well. So I just really like multifamily for all those reasons. And it's nice because we're kind of pitching each other. So we're like, yeah, this is good.
Awesome. On that note, this takes us to the adventurous four. These are 4 exploratory questions we ask all of our guests. Eric, are you ready?
Oh, I'm ready. I'm super ready.
Cool. So the first question we have for you, Eric, is where is one place you wish to travel to and why?
Yeah, Japan's been on my bucket list for a while. My brother turned 42 years ago and he was like, let's go to Japan and ski there for his birthday. And we got all jazzed. And then COVID came along and kind of smashed his 40-year-old dreams. So I still haven't been. I'd love to go. I love the food, culture from what I know. Love to ski there. So that one's pretty high on my list.
So then the second question is, what is one thing on your bucket list besides Japan? And how are you leveraging your real estate investing to achieve it?
Yeah, actually, this one's I'm proud of. My wife and I have decided we're going to try and live somewhere different for at least a couple of months during the summer, because our oldest just started kindergarten. So we're like, okay, now unless we want to homeschool, we're somewhat confined to the summer. So we're like, let's travel somewhere and live. I mean, we use that term loosely, right? For a couple of months somewhere else. So the plan is to live in Barcelona next summer. So that's kind of been on the bucket list for a while. And yeah, really, I mean, the passive income and the ability to go and work remote, those type of things have led to the ability to do that. So as of right now, that's the plan for next summer. And then the summer after, we'll kind of see. But that's our short-term goal.
That's exciting.
Yeah.
Also, number 3 is, what is one piece of advice for someone who wants to start passively investing in real estate?
Yeah, I love that question. I think take the time to get to know your sponsor. If you don't know them, well, a lot of times they have to have a relationship with you. But if they don't, get to know them, spend some time. Most sponsors, operators are pretty open. Like if someone calls you guys, you're going to take the time to talk to them. You want to know their financial situation. Just take the time to get to know the team and then do a little bit of homework. Try and understand the underwriting as much as you possibly can. Ask the questions of, what does this mean? Again, if someone asks you guys or myself, hey, can you explain this piece of your underwriting? Like, absolutely. I would love to explain that to you. And it's not like you're bothering them. I think people think it's a bother. It's like, well, I don't want to bug you with these questions. That's not the case. It's more like, no, I want you to feel extremely comfortable with this investment. So if I'm a passive investor, I would take the time to get to know you guys and get to know your underwriting if I'm going to invest with you.
I like that.
Totally agree. Absolutely.
But then the fourth and final question is, if you had unlimited resources available to you, how would you leave an impact?
Oh man, that one's hard. So this is what we talked about, and we were going to talk about a little bit. As Marie and I have traveled quite a bit, we've been extremely blessed to see parts of the world. What I have understood, at least I think, is money doesn't solve problems. So I love the question of resources, right? Like in a situation where, and people also have to ask or want to be what we call helped. Because a lot of times they're like, oh, those people don't have as much money, or they live in a small shack or whatever. But a lot of times people are super happy and don't need help or want help. So I think that's a pretty like loaded question. But in a scenario where there's like extreme poverty, or maybe like situations where people can't get out of, like there's parts of India where people get flooded every year, and that's just part of their life. So I'd love to help those type of situations that make a major impact. It's like, you know what, let's build some dams and let's build some levees. And there's a whole population of people that get helped immediately. And that type of stuff is what I think I would target. But gosh, that's a hard question. So hopefully I answered at least a little bit without dodging too much.
And if you get to do that one day, maybe we can make it so like a bunch of real estate investors go together.
Yep.
We can all
Do
go
it.
there.
Yeah, I love it.
Yes.
Yeah, I have a couple of cool stories about that, but I'll tell you guys offline. I won't bore the listeners, but
We promised the listeners at the very beginning that we would share what we were talking about. And you kind of got into it a little bit, Eric, but Eric was just mentioning that he and his wife took a year off. I'll let you tell a story.
yeah, so this is kind of a cool story. I was working just kind of engineering job, and we were saving up some money, and I basically told my wife, Maria, I was like, I think we should travel for a whole year or something. And she was like, yeah, right. Kind of roll her eyes. And then I stumbled upon people who were driving from the US to the bottom of Patagonia. And I was like, wow, that is cool. And still kind of out of the realm of possibility, right? But then I started reading some blogs, and it was like, just the average person, like saved up a little bit of money, bought a camper or built a camper, whatever, and drove. And I was like, this is cool. So I just started randomly sending blogs to my wife. Just like planting seeds. But then months later, she's like, wow, this is possible. And so eventually we started like researching more and saving some money. And so we bought a 1982 camper. They're called Chinooks. It was a pop top camper thing, 2-wheel drive, and drove from here to the bottom of Patagonia. And we took a year to do it, and lots of adventures along the way. But yeah, an incredible trip.
Question is, did you drive back, or do you just like,
No, we sold the car there. Yeah. So there's actually quite a few Europeans who do the opposite direction. They'll fly to like Argentina, Chile area, buy or build a car there, and then drive north. So there's actually a network of people. There's like a German Craigslist is where I posted it.
That's cool.
And I seriously wrote like, I don't understand any of this. I'm so sorry I don't speak German. I'm going to write this in English because I know you guys can all read it. A mountain of people, because it was affordable. Like we bought, I think I sold it for like $3,000, which compared to most like overland vehicles, that's just an incredible like deal, I guess. And so people wanted it pretty bad. So I sold it to this German guy. And it's a funny story. Like when he bought it, I was like, okay, dude, can I show you, like, because I built the water system and electrical. I got super nerdy. I was like, can I show you the stuff? He's like, no. He's like, I'll learn it. And seriously, like handed me cash, and then drove away. And I was just standing there on the side of the road in Argentina by myself, like sad. Like, I didn't get to like show off my thing. So anyway, it was like kind of a sad end to the story, but I'm glad someone else got to use it.
Yeah. Somebody else loved it.
put like an air tag on it.
I know I should have made him listen to me. Just like, I'm not selling until you hear my story. No, so we sold it right before Christmas and flew home for Christmas of 2015. So we basically took Christmas to Christmas off, which is good timing because we were in Patagonia for the summer.
Yeah.
That's nice.
Mm-hmm.
That's
so
cool. I like it.
Absolutely. Well, Eric, it's been an absolute pleasure having you on the show. I appreciate all the information you're able to share to our listeners. Would you mind sharing with our adventurous family how they can learn more about you?
Yeah. Basically, everything is on our website. If you go to wildoakcapital.com, you'll find our podcast there. It's a real estate mindset podcast. And then you can reach out to me. It's eric@wildoakcapital.com. I love to chat. So if anyone reaches out, I'd love to chat with you.
Thank you. And we'll make sure to have that in the show notes so everyone can get a hold of you very easily. But again, Eric, thank you for joining us today.
Absolutely my pleasure. Thanks, guys.
Absolutely. So until next time, explore more, adventure away.
Woo!